My name's Michael, and welcome to another episode of the Midweek Market Pulse. We have a lot to talk about, so let's get started. Alright, if you haven't catched my last video, just do another recap of what's happening this week in the market. Monday, we had retail sales, which came in somewhat positive. That drove up the market a little bit. Tuesday, housing starts, which I'll go over in today's episode. The NVIDIA GTC, the GPU Technology Conference, just finished yesterday with a lot of the top names in NVIDIA. Just announced a new AI component that they're going to be introducing in the future. The Feds finished up their two-day meeting with Jerome Powell, announcing his plan with interest rates. General Mills released its earnings on Wednesday, which came in somewhat positive, but a negative surprise on their revenue. Thursday, today, we have Nike's earnings being released, which is going to be huge for the company to see whether or not they are back on track with their regular game plan, and also FedEx with their earnings to see where the shipping industry currently sits at. So this past month, the market has not been doing well at all. If you haven't noticed already, the Nasdaq's down negative 11.7%. The S&P 500 is down negative 8.26%. And the Dow Jones is down negative 6.39%. Now, the Nasdaq is more heavy on the technology side of things, which the technology industry has been taking quite the hit. But they have quite the large opportunity for future growth, as I'll explain with NVIDIA for our weekly stock picks. The S&P 500 is also more heavy on the technology side of things, so they're also down a pretty significant percentage. The Dow Jones now is more heavy on the financial companies, so they have taken less of a hit. The financial companies have been taking a hit, but not as much as some of the other ones. So really the main reason is the market is not reacting good towards the tariffs at all. So Trump will threaten the tariff. The market kind of stays where it's at. And then Trump ends up initiating the tariff, and the market goes into a free fall of a lot of sell-off. I think a lot of investors weren't really ready for Trump to really go through with that tariff plan. But he did, and it did not work out at all. And then Trump then works on an agreement. I think the U.S. has been dealing with some really bad trade deals, so for Trump to implement these tariffs is not necessarily a bad thing. He's trying to work on a more favorable trade deal for the U.S., but this has definitely been driving down the market pretty significantly. Now, I think in the up-and-coming weeks, it is announced that Trump wants to do a 250% tariff on Canadian dairy products. I don't know if he will actually go through with that 250%. We're yet to see, but he definitely will be hitting some type of tariff, which will then again drive down the market even more. He also is planning to hit some tariffs on lumber. Now, this will also drive down the market even more than it really has already. Tariffs aren't going to stop in the near future. Trump made that pretty clear. I think a lot of investors are ready for tariffs to stop. This is not really favoring out for the market, but I think Trump has a plan in what he's trying to do. He is trying to make those favorable trade deals for the U.S., but there is some type of theory circulating around right now that I'm going to discuss. Now, China and Canada and Mexico are slapping back with tariffs on the U.S., so a lot of investors are fearing that GDP is going to fall, inflation is going to rise, and a recession will begin to happen in the near future if Trump continues to implement these tariffs. What I think is GDP may fall a little bit. The recession fears are definitely considered in my analysis of things, but for now, I don't really view it as too much of a worry. We are in the correction territory, which a correction has an average of a 10% downturn. Nasdaq may start approaching into a bear market sell-off, which that average is around 33%. We haven't seen a bear market sell-off in a while now, so that definitely is not a good thing for the market at all. I mean, corrections are healthy in any financial market. You're going to see some type of correction in some way. Yeah, I mean, if you're in it for the long game instead of the short game, corrections are 100% healthy. I think that the market needs to go through a correction at some point, and we saw the market being considerably overvalued to a point where in my lifetime, I'm a young investor, I've never seen the market been this overvalued. So some type of correction was necessary to kind of bring down that valuation, and it is bringing a lot of discounts into the market, which is just a better time to get into some of these companies at a lower price. Now, the whole Trump market crash theory, this is just a theory. Do I think that it's true? Maybe. Right now, it's kind of hard to not really consider all of the factors that could be causing this crash. I mean, the crash is due to the tariffs, no doubt. Now, the U.S. has around $36 trillion in debt. In 2025, they need to finance around $9.2 trillion in debt. So, by Trump crashing the market through these tariffs, it starts to bring down the interest, and that in turn just makes them repaying back this debt a lot cheaper than if the interest rates were high, which for the past year, the interest rates have been increasing super steadily. And maybe Trump is trying to do this to bring down the interest rates to kind of help repay back this huge, large amount of debt that America currently holds. And I think we're just going to, if this debt's not going to get paid off with a lower interest rate, we're going to see quite the financial struggle for the U.S. as we start to accumulate more and more debt as the future of the U.S. continues to grow. Now, the housing starts came in pretty positive. The market didn't really react towards this that much. This is more on the housing market side of things, but there were 1.5K in new houses being started in the U.S. This is a good thing for the economy. A lot of people are saying recession, primarily due to the tariffs, like I explained, but people are able to afford housing. As you can see, this was a pretty significant increase from January of 2025. And, I mean, if we're seeing an increase, then people are able to start building new houses and new projects. Now, this is not on the business side of things, so this is on the privately owned housing side of things. So, it's not like businesses are being played in this metric. So 1.5 thousand is huge, and I really like to see that. The market sadly did not react to this, but like I said, it's more a housing market side of things. But I just wanted to add this in just to show you what this had on how I view the economy. And from this and the CPI, the PPI, which both came in somewhat positive. Retail sales came in pretty positive. I mean, the economy's not in such a bad place that a lot of investors think it is. I think they're just very fearful because the stock price is dipping down into a bear market sell-off instead of the correction that a lot of them are viewing it at. And that just creates a lot of panic in these financial markets. But the economy's at, honestly, like not a bad place, and I think we're still pretty strong. But the future does hold a lot of weight, and what Trump will do with his future tariff plans can definitely play a huge impact on maybe a slowdown in the economy. So Jerome Powell had his press conference yesterday at 2:30 p.m. Eastern time, I believe. He basically held interest rates. The market liked this a lot. It was up by a pretty significant amount in the afternoon before the closing bell and in the post-market. he did not shy away from talking about the possible impacts of tariffs. And like I explained, I think if Trump continues to impose these future tariffs and does not stop in the near future, this could start to drive up inflation pretty significantly. We're already seeing inflation rise, but from the CPI and PPI, it's only affecting certain categories of products. Energy's down. He did like to note that, but a lot of food is high. Like the price of eggs is significantly high. So if you like eggs, I would start maybe owning chickens. I don't know, but yeah, the Jerome Powell made it very clear that the economy's not in a very worrying state. He did hold interest rates, which I'm sure President Trump liked that. He stated, "I do think with the arrival of the tariff inflation, further progress may be delayed." So with the expected 2 rate cuts that the market put into place for 2025, I think from this we could see that, maybe the feds don't do any rate cuts. They keep interest steady. But Jerome Powell really wants to see how these tariffs are going to be impacting the economy in the near future if Trump continues to impose these tariffs on the market. With the future, then reality from these metrics is that the economy is not in a bad place. It's really not, and I think that they're just super fearful because of the panic sell-off, the tariffs. Personally, I'm not too fearful, but if Trump continues to impose these tariffs, especially the lumber and dairy products, and maybe move on to different product categories, we could definitely see an impact on the driving increase in inflation, maybe a loss in GDP too. But I don't think it's a bad idea so far what he's doing. He's trying to make more favorable trade deals for the U.S., which in the long term, that could drive the GDP to high levels that we haven't seen before. So what should you do? The market has been overvalued pretty significantly these past couple of months, I guess this past year, as it's been in quite the bullish uptrend. It's creating a large discount for a lot of companies, which just makes your investment even more profitable if you buy that dip on some of these strong companies. And it's really affecting the entire market right now, this correction. So maybe there's a few outliers, but for the most part, I'm seeing most of these large stocks get affected pretty significantly. Now, the possibility of a future decline definitely needs to be considered. Like I had just stated with all the Trump tariffs, if he continues to impose these, this could definitely have a worrying impact on the market, and we could start to see the S&P 500, the NASDAQ, and the Dow Jones go into a bear market territory, which I would not like to see. Now, corrections are healthy. A bear market could start to get worrying, and then we can get into a collapse, which we've only seen 2 times ever in the stock market. That's around a 40% decline. I don't think we're going to get into a collapse. A collapse something very bad would need to happen with just the U.S. as a whole, but the bear market could start to get worrying, and that could just even drive down the market even more. But yeah, I think for a lot of these companies, there's a huge opportunity to get it at a discount, and there's a huge opportunity for future growth, just like on the technology side of things, on the business side of things, and just what the future holds for all of these industries that I'm currently watching right now. All right, now for our weekly stock picks. First up, I got Texas Roadhouse. You guys got to know what Texas Roadhouse is. Great buns, just great food overall. My location where I live, it's always busy. And I went there maybe a month ago, And I started watching this stock super heavily because that place is just always packed. I went on a Thursday, it was packed. And a lot of restaurants, you don't see that many people there on a Thursday, so they're doing something right. Now, the CEO, Gerald L. Morgan, has done a tremendous job on working this company and really driving up the share price. They have a lot of future growth ahead of them. They franchise a lot of their locations, and that's favorable for both the franchisee and the franchisor. So what happens is the franchisee, I believe, buys out the location, and then the franchisor then starts to, which in this case would be Texas Roadhouse, would start to buy back that location. Now, I don't know if Texas Roadhouse does this, but I think as a whole, just for franchising, that's kind of how it works. And it's always a good thing for the company, and it can become very lucrative for the business. You saw McDonald's do it, and look at where McDonald's is sitting right now. So this is a huge discount right now, and with all of their future ahead of them, I think buying this dip is such a good thing. I definitely can see this stock price continue to rise. Now, I haven't done a full in-depth research on it, but I mean, there's a lot of good things happening for their company. First, it's busy. Their revenue is very high as compared to other franchises or just restaurants. They did mention they want to expand internationally, which I don't know how that would really turn out for the company, but definitely is a good prospect to get some good new market shares in different locations. That, I mean, just in turn drives up the price if it works out for them. So, but yeah, Texas Roadhouse for my number one stock pick. Up next, I got Costco. Now, Costco, you got to know what Costco is. Come on, Costco's great. They're definitely the future of retail stores. They sell everything. And they're just such a great company. Such a low turnover rate for employees. They treat their employees great. They pay them high. And I've never had a bad experience in a Costco. Now you're seeing a pretty large dip right now for Costco. Great time to buy. You should maybe start to see this stock go up, depending what's happening with the market. Trump's tariffs, all of that. Don't take my word on it. But buying this dip is such a good thing. I mean, Costco's a lot more further growth to them. Their revenue is so high. The way they make their revenue, just their whole business model as a whole is just so intriguing and so attractive to any investor. And right now, getting in that 898 50 would be huge. It would be huge because we're definitely going to see this stock continue to rise. Now, my last one is NVIDIA. A little bit of a controversial pick right here, but they did announce in the GTC conference they're going to be making a new AI. It's called Vera Rubin, and this is a company with such a large opportunity for future growth and future expenditures that I don't see in a lot of companies. You know, Jensen Huang has done a tremendous job at creating such a strong company. They have such a huge market position on AI right now and chip making in the U.S. And around the world. They're working with huge names like General Motors, implementing maybe an AI system in some of their new cars. They're working with Disney. They're working with Dell Computers to make a new computer. I mean, Jensen's not looking at a 1 year perspective. He's looking at a 10-year. And for any investor, you want to look at the 10-year. You don't want to look at the 1 year because short-term investing will not create the profits that you want. You want to look at the long-term game. And this is what NVIDIA is doing. Right now, the market's not doing that well, like I explained, but you're buying this at a dip, and you're buying that at a discount. And NVIDIA has so much room for growth. Definitely a stock to look at. All right, well, that's all I got for you guys for this week. I hope you enjoyed the episode. Make sure to hit that subscribe button, like the video, and comment below on any questions or just your perspective on what's going to happen with the market. Hope you guys enjoyed, and I'll see you next week.